Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, this morning we wake up, the Shanghai Composite up 3% on very heavy volume. And despite Hurricane Sandy, ADP report came out pretty positive for the jobs picture. Lastly, it seems like every headline that we're seeing with regards to the fiscal cliff is starting to be put into perspective that perhaps maybe a deal will not get done. But beyond all that, we had a mini risk-on rally today. Equities climbed pretty well, but we're seeing a breakdown in macro correlations, and we're seeing that play out even in the volatility picture. When you look at the S&P implied, you look at Dow implied versus NASDAQ, you're seeing both the VIX and the VXD down today about 3/4 of a point, 3-month vol, compared to the NASDAQ three-month vol, which is up about 1/4%. What we're seeing is an outperformance of financials and industrials as compared to technology, something we haven't seen in quite a while. So macro correlations are breaking down just a touch. Moving on to FX, the dollar is slightly higher with this risk-on rally that we're seeing today, although vols are mixed. Let's keep this all in perspective, managing expectations that vols are very, very cheap, especially in the G7 vols. I have to also say that risk currencies, whether it be Aussie or Canadian, are mixed as well with volatility. Moving on to oil. Oil, again, volatility has inched higher, even though oil is down for a second straight day. It seems like a lot of people are thinking we're sitting right on a key support area. A lot of players are coming in with downside protection, causing vol to lift up higher just ever so slightly. Moving on to metals. Gold vol today sharply unchanged. We've seen a volatile market with volatility, especially with gold in the front 2-3 months. However, at the end of the day, volatility did tail off. Gold down for the second day in a row. One of the bigger stories, though, is in ags, especially when we see corn and soybean. With all the news that came out, both products skyrocketed higher and vol followed suit. What we saw in term structure is term structure actually lifted, especially in soybeans. The soybean vol has been down so much for the past several days. We're seeing a lift in the first 3 months in soybeans. But besides that, it's been a mixed day. Most commodity assets are flattish, except for the ags. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.